This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTJ.tax.
So good evening to those of you in France, and good morning or good afternoon to those of you in different time zones. Welcome to HTJ.tax. We do these live streams every week. Every week, a different tax-related topic of interest. So this week will be France-US taxes. Right, thank you. So please keep your, please stay on mute. Please stay on mute. We will have Q&A at the end. So the way we normally do it is that Hervé, our honored guest, French tax expert, will run through some slides, give you a basic overview, and would actually answer some of the questions that some of you posed, but we'll get to the Q&A afterwards. And once he's finished with his presentation, then we'll get into the questions and answers part of our session. So we've received about 15 questions. Thank you for those that send it in. For those who have not yet done it, feel free to type in the box below. If you are on Zoom, if you're on Facebook, LinkedIn, Twitter, or YouTube, you can type in the box below as well, and I'll hop across every once in a while and check it out. This is being recorded. So again, if you don't want your image to show, all you need to do is keep your camera switched off. Otherwise, you'll be recorded as well. So without further ado, oh, well, of course, we always have to give the usual disclaimer because we are both licensed by our relevant jurisdiction. So we are legally obligated to tell you that nothing we say here should be construed as advice. We're having a general conversation around general principles. If you want intelligence that is specific to your unique circumstances, you would need to engage a team who will then know your situation inside out. So you can treat this as educational, or you can even treat it as entertainment, but it is not meant to be advice, and that is really important. And I hope you keep that in mind. So now, without further ado, I turn you over to Hervé. Hervé, all yours.
Yes, I'm here. Hello, so I'm Hervé Belave. I'm a chartered accountant in France. I will share my screen. Yes, here it is. You should see a magnificent PowerPoint. Yes, do you see it clearly? Okay. So I'll try to entertain you with taxes, with French taxes, the ones that you may be exposed to if you have some activity in France. First, a bit of statistics. Starting a business in France is usually seen as difficult. We have the impression that foreigners see us as complicated people. So there is a World Bank study every year, which is doingbusiness.org, and the rank for France for starting a business is 37. So not in the top, but not so bad. And we have a global note of 93.1 to start a business. So it is maybe not so difficult. And usually to start a business, you need what we call a SIRET number, which is the number to identify any company, any business in France, and it's usually 1 week to get it, so it can be quite quick. And the main questions you'll have to answer to set it properly is what is the legal status of my business? Do I want to set up a company? Do I want to work as an independent? You have to choose at the beginning on what is the type of tax which will be used to tax the revenues every year. It is personal income tax or corporate tax. Is my activity professional, not professional? This will drive the taxation to social contributions, and which is linked to the social status. I am self-employed. I am employed by my company. There are there are some important choices to make, and they drive the structure of the companies. They are really important for the future. So there are two main taxes to tax the revenues. You have first l'impôt sur les sociétés, the company income tax, or you have, we'll speak of it later, the personal income tax. For the company income tax, the taxpayer will be the company. It is based on the net result determined by accounting books. This means you absolutely need some accounting books, and what is taxed is the net result. The general rule for taxes in France is that you are taxed on your revenue less all the expenses needed to get the revenue or to keep it. So and the state, sometimes some clients tell me, but can I do this or can I do that? It is not written. It is your responsibility to determine whether it is needed to run the activity, to get the revenue, or keep it. And in case the taxpayers, in case the tax office tells you this shouldn't be in your accounts, you tell them you have to prove it at its place. So this tax can be diminished with some tax credits. The main ones, the most expensive one for the states, are the tax credits used for researchers. So crédit impôt recherche, jeune entreprise innovante, which are two types of tax credits to help the really innovating companies to get developed. The rates for the small and medium companies are 50% of the net result till yearly result of 38,120, and it is 26.5 above for 2020. It should be 25 in 2022. That was an objective a few years ago, and I don't have any news it should change. So you should be able to consider that it will be 25% next year. When the company operates, then it is taxed on the company income tax. What is left, it is at the disposal of the shareholders. When you pay dividends to the shareholders in their private income tax will have to suffer a 30% taxation on these dividends. The second main type, the usual type of tax which is due by any person living in France, is the personal income tax. So as I was telling you, it is usually seen as complicated. In fact, it was established in 1917, so it has proved its efficiency for the tax office to collect taxes, and it's quite efficient. So it is paid by physical persons only. If you have a company, you don't pay this tax. But if you have a company which is not taxed at the company income tax, then the revenue of the company is directly distributed among the shareholders, and then it is taxed at the level of the shareholders. So this tax, this income tax, if you have some activities in France, you may wonder whether you have to pay these taxes or not. So this tax is in fact subject to international treaties. So there is one within a country. So there is one in the United States that says which revenues are to be taxed where. The objective is that no revenue is double taxed in both countries. And the usual rule between countries for non-residents, they don't have to pay this personal income tax except on their real estate revenues for the real estate which is situated in France. That's the global rule. There can be some little exceptions. So there is no, for the personal income tax, there is no consideration of nationality. You are a taxpayer if you live in France more than 6 months in the year, be you American or French. So it is paid by about 40% of the population because the rate of this tax begins at 0%, and depending on your revenues, it goes from 0 to 45%. And there is a temporary contribution for high revenues. It's 3 or 4%. It's something like when you get more than 500,000 euros a year. What is important compared to other countries is that the personal income tax is calculated for the household. Basically, the household is 2 adults maximum, and who have a legal link, so they are married or they have a PAX, and the children are in the household. So if they have some revenues, for example, if they work, even though they are less than 18, the revenue is added to the revenues of the parents. So every child till 18 is considered to be in the household, because 18 and 25 years old, the children can be in the household with their parents or pay separately their income tax. There is no obligation of people having the same address. So, for example, you can have the husband in one country, the wife in the other, etc. It can be one household. And so all revenues are all revenues in the household are counted together to determine the taxable revenue. I have made a small chart here with a red line and a blue line. It shows the effect, in fact, of household, because for the same revenue, the red line is the tax you pay if you have the revenue for only one person, one adult. And if you have 2 adults and 2 children for the same revenue, on the blue line, you have the tax to pay. So there is a real effect, a real progressive effect of this taxation on the household. Remember, it was set up in the years 1917, when usually in a family you had one father, one mother, some children, but the mother was not working. So, as I told you, for the company income tax, the taxable revenue is the gross revenue less the expenses to get it or keep it. So, in fact, it is organized so that as many possible information comes from another source than the taxpayer. So for wages and pensions, in fact, it is the employer, the social body, that will send the relevant information to the tax office. If you have investment income, capital gains, it will be globally your bank which sends the information to the tax office. And when you have income from the property, you need some accounting, which is quite simplified. And in this case, as you provide yourself the information, and if you have low revenues from properties, you can use the micro foncier schedule, which is, in fact, you just declare your revenues, your gross revenues, and there is a percentage to represent all the expenses. For the business profits, the non-commercial profits, that's for example for doctors or consultants and agricultural profits, the rule is to get accounting books and then to determine the net result. If you have small businesses, there are some simplified ways to determine the revenues, which are micro-entrepreneur, micro-LMNP. So LMNP, it is people who rent a real estate with furniture and who are non-professionals. Micro BAs for agricultural, micro-entrepreneur can be also for non-commercial profits, for example, for consultants who have a low revenue. So in all this simplification, as I told you, in fact, the rule is you declare your turnover, and depending on that, your expenses are automatically calculated with a percentage. The problem is, I think, that's why I tell you this last phrase. It is a way to simplify the tax return. It is not a way to optimize your tax. Because here, if you have low revenues, as soon as you get €1 of revenues, you pay some taxes. If you use accounting books, maybe you have quite a bigger gross revenue, but you can report all your expenses to get it, and maybe you have a deficit and pay no tax. So, depending on your situation, the most simple is not always the best. To get some rebate on this personal tax tax income, so there are some tax credits. The main one is if you employ someone at home, you have a tax credit of 50% of what you paid to the people, plus the social contributions. So to do that, you must employ directly your employee, or you must use licensed companies. And there are about 50 services available for housekeeping, gardening, and for chartered accountants. We can use this schedule to assist you to file a tax return. It is only available for people who live inside France. It is not available for non-residents. Just a point of revenues coming from US. So the rule will be real estate. So the revenues from real estate are taxed in the country where the real estate is. In fact, if you have an apartment in France and you rent it in France, you have to pay some taxes in France. And if you are non-resident, the minimum taxation will be 20%. For other revenues, in fact, you have to declare the revenues. That's must for residents in France. If you are a resident in France but have some revenues in the US, then the revenue is to be declared in France, and you'll get a tax credit to avoid a double taxation. That's the main rule. And of course, it is completely useless to say, oh, on this revenue, I have paid the taxes in the US, even though I shouldn't. In fact, this will be not relevant if you are controlled by the French tax office. The US tax office will send no money to the French tax office. Okay, it is not that you choose the country where you pay your taxes. They are to be paid in France, or yours are to be paid in the US for a certain type of revenues. Above this personal income tax, we have another tax which is called CSG, which is Contribution Sociale Généralisée. In fact, it is a social contributions, but it was considered in the end of the 80s that people who have only revenues from the capital, they don't pay any social contributions, but the benefit, if they are sick, they benefit from the hospital. So, and all the social security system. So they had to help finance it. And so this tax was established to finance the social security system. On the activity revenues, let's say wages or business revenues, the rate is 9.70%. And on patrimonial revenues, the rate is 17.20. And as it is quite complicated, you get a refund on next year's revenues of 6.8%. This tax is not very well known because first it is complicated and everything is made so that you don't see it. For in the salaries, people don't see it because it is in their pay bill and they only look at what they get net after taxes. And in the dividends, for example, at the beginning, it told you of a tax rate of 30%. And inside this tax rate of 30%, there is a CSG of 17.20%. So in fact, the tax rate for personal income tax is only of 12.8%. And if you have to pay this, you'll get an extra tax notice. If you are, we have also a wealth tax, which is based now only on the real estate you own in France. This tax, as it is called IFI, Impôt sur la fortune immobilière. It is based on the market value of the real estate. So the value, the basis for the value changes every year. It is a value on January the 1st. And you must include the real estate and the shares you could have in some companies where the real estate is bigger than 50% of the assets. So usually the property companies. And so it is applicable if your global real estate in France is bigger than 1.3 million euros. There are different rules for residents and non-residents. If you are a resident in France, even though you are an American or not, you have to consider all your real estate worldwide, be it in France, in the US, or in other countries, and submit it to the taxation. If you are non-residents but have some real estate in France, you have only to declare your real estate in France. So you need to have real estate in France for more than 1.3 million euros. The rate is 0.5 to 1.5%, but as I told you, it is based on the value of the real estate. So it is at least paying something like 20,000 euros if you have to pay it. It's quite. Oh, sorry, and yes, I think you have a federal wealth tax paid, federal wealth tax in the USA. So if you, as the rule is always avoiding the double taxation, if you have to pay this wealth tax in the USA for some real estate in the USA, then you get a tax credit to avoid the double taxation. If you are in France, you have a business and you want to have some American people coming to your business, there is a scheme which is quite interesting. It is an expatriate scheme. So in the case you recruit a manager abroad to work in France, he mustn't have lived, he mustn't have stayed in France for the 5 past years. But in the contract, in the employment contract, you would write the normal salary for the job done plus an repatriation premium. And then on the personal income tax of the manager you have recruited, this premium wouldn't be taxed for 8 years, in fact. And if the manager you recruit is could be subject to real estate, to the IFI, the wealth tax on real estate, then the rules for non-residents apply. So only the real estate in France would apply. So it is quite an incentive to have managers with high revenues coming to France. And of course, this is available to any company in France. That's not to be too long. That was the main things I wanted to tell you. I hope I have entertained you with taxes.
All right, wonderful. Thank you very much for that comprehensive overview. And thank you for those that have submitted questions. We now have over 20 questions. So we will try our best to get through as many of them as possible, given the time constraints. For those who just joined us on Facebook and YouTube, thank you for joining us. You can type your questions below and I'll get to them if we have time, unfortunately. So the first question that we were given, okay, how is crypto treated from a tax perspective? What I'll do, Hervé, I'll comment from a US perspective, because I'm assuming that whoever it is residing in France and they're also US exposed, right? So from a US perspective, the guidance that we have from the IRS I think it'll be Notice 2014-21 and Notice 2014-16. And then in 2019, we got Revenue Ruling 2019-24. So it's essentially your crypto is treated like any other asset. In a way, it'll be subject to capital gains, assuming that you're an investor. I'm assuming you're an investor, whoever asked that question. If you are a trader, that's a whole other conversation. But let's assume that you're an investor, just to keep it simple. It'll be subject to taxes, capital gains taxes, whether short or long term, depending on how long you held it for. And in terms of transactions that would be considered a taxable event, we're looking at, obviously, if you're trading crypto to fiat, right? So that's kind of obvious. But also when you're trading one crypto for another, so crypto to crypto, as well as spending crypto to purchase goods or services, or earning crypto as income. So that's for miners out there, that'll be subject to that. That's considered a taxable event as well. And you know, I can throw in there those that some of you I know lend crypto and you get interest for lending on crypto. So that'll be taxable as well. So if it's interest, that'll be taxable as interest normally is on your Schedule B. So it's either ordinary, to summarize, it's either ordinary income or capital gains, and depending on the nature of the transaction. That's from a US perspective. Hervé, what about France?
First, we have the same distinction between traders and those who could buy some crypto just for personal perspective and not doing so many movements. They could be considered as professionals. It will be taxed. In fact, the crypto is considered like any good, so it is taxed when you sell it to tax the capital gain. And for all the financial matters, it is like the dividends. So the capital gain you make with the crypto is taxed at a level of 30%. Can be quite tricky because, in fact, what is considered is when you convert crypto to euros or to any other currency. So if you sell a crypto to make a change, if you change it, if you go, for example, with some Bitcoins, you buy some Ethereums or things like that, then it is not taxable because but when you change your Ethereums to euros, then the capital gain should be calculated. Okay, and so it can be after years, etc. I'm not sure the control of the tax office is very very effective on this. I don't know at all. I have not had any example. I think there was another question, which was how can I manage my crypto? Is there a tool to manage it, to declare the relevant tax to be paid? And honestly, I've never practiced it, but I was said that there is one which is called Waltio, WAALTIO. I just write it in I put it in the written part, and that's one that I would said to manage the capital gains on crypto. I think it is linked with several platforms to buy and sell cryptos. But honestly, I have never used it, and I can't give a real advice about it.
Thanks for that, Hervé. And just to kind of follow up on what he just said, there are a number of commercially available tools as well as services for tracking your transactions, because on whether you're looking at it from a US perspective or a France perspective, it's important to track the transaction. So when you sell a coin, when did you purchase it? You need to really have robust bookkeeping so you can figure out exactly when was that purchased and how much was it purchased for, and what was the holding period. So so however you decide to keep track of that, doing so is super important. We have clients that use commercially available third parties services. People use spreadsheets. However you do it, you just need to stay on top of that. Just following on the questions, question 2 and 3, I'll roll that up into one question just to try and be more efficient. So someone is asking, in terms of a tax planning, in terms of tax strategy, is there anything that they can do to, I guess, mitigate or manage the gains on crypto? A comment from a US perspective, obviously, I think one of the more popular tools, especially this time of the year, I guess, in terms of a planning tool, would be loss harvesting. So if it is, you have a portfolio, you have gains in one space and you have losses in another space. So this is, the losses may not be realized losses, so they're book losses, and you have some gains from some of the elements of your portfolio. You may choose to sell some of the coins or the assets that are already experiencing a loss, and so you can book that loss, because under the US tax rules, you can offset capital losses against capital gains. So then you get that offset, and then you can buy it back, especially with the end of the year anyway, and you can buy it back. So I know there are wash rules that apply to stock transactions, so that technically won't be allowed. But at this point in time, there's none that applies to crypto. So you can do some loss harvesting with your crypto. In terms of any longer term gains that you may be experiencing, and especially for those that are really experiencing high upside, which many of you are, I think one of the more popular tools that are being discussed right now in the US specifically will be opportunity zones. So it is a very involved and technical subject area. So you may want to talk to either ourselves, our team, or your chosen tax professional. But it does allow you to defer, kind of like a 1031 exchange with real estate. It may allow you to defer recognizing and therefore being taxed from a US perspective on gains. And it may defer it, or it may eliminate it depending on how it's structured. So that's it from a US perspective. Any planning tools or strategies, Hervé, from a French perspective?
I would say that the strategy is to distribute the revenues of the year. You have an interest at having quite a linear revenue. For example, if you get if you get a deficit, for example, 1 year, it won't, as it is taxed now separately with a 30% rate, you don't have, it will not diminish your taxation on other revenues. With a deficit, you have quite a risk. Yes, you will lose it. So you have, yes, to streamline, I would say, your revenues and yes, to be able to cover the deficits of the year to come. So I would identify some capital gains, maybe transfer them to, I think there are some cryptos that are based on real currencies. I think that's substable
Stablecoin,
have a name. Yeah, maybe you could transfer them and then use this kind of cryptos when you have to compensate with some deficits to make always quite a benefit. That's how I would do it. But anyway, cryptos are risky products. Anyway, so.
All right, moving on. Okay, I'm gonna, again, I'll just in the interest of time and efficiency, I'll combine question 4 and 5 into one question. So one of you approached me and asked about setting up companies offshore, well, i.e., I guess by definition, outside of the US and outside of France, as well as setting up bank accounts offshore with the view that that will save you on taxes. And you're going to be continuing to run the present business that you have. So we declined to work with you on that. And I thought it would be only fair to explain why. There's I guess because of movies and stuff like that, there's this perception that merely establishing a company in another jurisdiction and not receiving money into the jurisdiction in which you reside will automatically save you money, because somehow magically this is not reportable to either France or the US, and that could not be further from the truth. When you are a tax resident in France, ordinarily tax resident, you are subject to taxes on your worldwide income. As a US person, you're also subject to taxes on your worldwide income regardless of where you reside. So therefore, just merely setting up a company doesn't, I know there are lots of movies and stuff, but that is not exactly how that works. It is essentially illegal, a tax evasion, if you were to do that. So we really don't do that. However, there are service providers that would help you with that. And that leads me to the second point within that. So the way I won't comment on the French tax authorities, but I can tell you how the Internal Revenue Service in the US works. And you've seen this in loads of movies, right? So if it is that they find a taxpayer that did something wrong, they did something illegal, they were willful in what they were doing, and they have been found guilty of tax evasion, right? So basically they got caught. The first thing the revenue is going to ask you is who helped you? Because to be honest, they're not probably interested in you and your 5 or 6 figure bank account. They want to know who's your enabler, because they want to look after, they want to chase the big fish. So that's who they're going to ask. And they will offer to be lenient. You tell me who helped you do this, set up this company, set up this bank account, no problem, you can walk. And so then you are heavily incentivized to identify the tax professionals that helped you. And once the revenue identifies those tax professionals, the revenue will then systematically audit all of their clients to look for a pattern of wrongdoing. So I say this to make a point. If you find someone who's willing to cut corners for you, they're probably willing to cut corners for other people as well. And once they get caught, all their clients will be subject to scrutiny. So that's a risk that comes with that. So I hope that explains why it's dangerous for you to do it and why it's dangerous for tax professionals like us to do it. So I'm sorry that we couldn't work with you, but yeah, that's the way it goes. All right, moving on. Someone was asking about the blacklist. So obviously at the OECD level, at the EU level, there are countries on the blacklist, meaning that if you're doing business from France, so you're based in France, you're a French tax resident, you have a company there, or however you've structured it. And as part of your structure, your personal structure, your corporate structure, you use companies in certain jurisdictions. France doesn't like it. So there's an EU list of countries they don't like, that the EU doesn't like. And France in particular, they have their own list of countries that they don't like. It was last updated in around January last year. And Panama, the previous list was done in 2016. So the new list was done at the top of 2020. And Panama is the only country that remains on the list. And of course, if you've been following the Pandora Papers and Paradise Papers, and you'd know why Panama is just always on somebody's blacklist. But the other countries that you need to be aware of, and you need to probably avoid using them in your structures once you're French tax resident, would be Anguilla, the Bahamas, the BVI or the British Virgin Islands, which is a really popular option, Seychelles, Vanuatu, Fiji, Guam, and the US Virgin Islands, Oman, US Samoa, Trinidad and Tobago, and I already mentioned Panama. So I actually have a citizenship to one of those jurisdictions. So I always keep an eye on which blacklists that it ends up on. So yeah, please bear that in mind. And in terms of the follow-up question, well, what will be the tax consequences of using a company incorporated in one of those jurisdictions in your structure? Well, in terms of French source interest and dividends paid on a bank account located in one of those jurisdictions, they'll be subject to 75% withholding tax in France, regardless of the beneficiary's tax residence. Royalties and other service fees paid by a French debtor to beneficiary domicile established in one of those jurisdictions, again, 75% withholding. The capital gains on the disposal of securities of companies established in one of those jurisdictions, excluded from the participation exemption regime. So basically, just to summarize, it will be subject to scrutiny. It will be heavily taxed, and whatever treaty benefits or whatever someone may have told you or you may have hoped to get, you won't get any exemptions, you won't get any benefits, you won't get any breaks. So you are penalized essentially for using those jurisdictions. I hope that helps. Avoid them. Next question on the list. This is a pretty simple question. I'm thinking of moving to France from the US. So this is one of those who are still in the US. So good afternoon to you. Would I be double taxed? And Hervé, if you were able to join from the beginning, you'd have seen his presentation. If not, this entire thing is being recorded and it will be available on YouTube, on Facebook, on podcast platforms like iTunes, SoundCloud, I think Amazon, we have them on over 20 podcast platforms. So you can look at it again, but to cut to the chase, no, you should not be subject to double tax. Hervé did speak about the principle of foreign tax credits. Both countries recognize foreign tax credits. So you get credits for taxes paid in the other jurisdiction to offset any taxes due in one jurisdiction. In addition to which is a tax treaty that has been signed and executed between both jurisdictions, which can also be invoked should there be any matter that risks being double taxed. So I noticed at the beginning, I said, normally you would not be, but unfortunately, yes, one must be honest, there are circumstances when you could be double taxed. And that typically, the one that we see most frequently would be state taxes. So of course, within the US, you have federal taxes and state taxes. We normally counsel our clients when they move abroad, they should take certain actions to sever domicile with, if they're in one of the states, one of the many domicile tax states, you must sever tax domicile with that state. And we recommend setting up domicile in one of the 8 states where there is no income tax. So like a Florida, Nevada, Wyoming, Alaska, or whatever the case may be. Texas is quite popular. So that, because under some circumstances, a domicile state like California, especially Virginia is perhaps the most aggressive of them all. Even though you no longer reside there and you do not reside there for years, and you living in France for how many years, you can still be subject to state taxes under some circumstances. So, and the principle of tax credits, which Hervé went into and explained perfectly when he did his presentation, that applies to the federal level. So the federal level, i.e. the IRS, would give you tax credits or would recognize credits based on what has already been paid in France. But the states do not recognize tax credits. So you may be double taxed at the state level. So again, take advice as you plan to make your move to France. Next question.
Yes, moving from one country to another is can be quite complex. So it is the time when you need someone for assisting you, for sure.
Absolutely. Okay, the next one is for you, Hervé. What is the best way of holding investment property, investment real estate in France? And I think you hinted at this in one of your slides, but should I hold it in my own name, or is there a tax benefit to holding it using a company, Hervé?
Well, I could tell you first that one of the rules in France is equality. So it is not so much important that you invest by yourself or you invest through a company. For the taxation may be the same. There is quite an interest if you rent some real estate with furniture completely equipped. Then I consider there is a quite special scheme which is called LMNP, and so I think it is preferable to own the real estate by yourself, because the scheme is not available when you rent through a company. However, you don't set up a company or buy something on your name only for tax reasons. For example, I have some examples when 10 people have bought together an apartment in Paris to be available when they come to Paris. With 10 people, you don't buy, even though you can be several to buy in your own names. But the rule for making any decision is unanimity. It is not very practical. In a company, well, you have some people who have different shares, who have different level of capital, who have not invested the same, and they don't have the same power to vote. And there is a manager who can make the decision. So, and for example, if you have a company, then you can give some shares to your children if you wish. And you can you can divide the property to keep the usufruct and give the share to your children. It is not so easy when you own by yourself. So you have to see it as any investment. There is tax, but not only tax, and you have to decide what you'll do with your investment, what is it for, and what you want to do. Usually a real estate investment is long-term. So see in the long term, and the company maybe is a nice choice.
Wonderful.
So,
Thanks for that. So, and just to summarize what you've just said, the motivation should and cannot really be taxed. There's no definitive tax benefit, but under certain circumstances, there are commercial and practical benefits to holding it in structure. And as always, it's good to take advice before making your
yeah.
decision. Yeah.
When you buy a car, you don't only look at the price of gasoline.
Absolutely. You have to look at that big picture. Wonderful. Okay, so this is a question that was actually asked 3 times. So I'll just roll that up into one. So basically, I'm just going to cut to the chase. Someone is asking, and we get this question every time we do this, about the assurance vie. How is the assurance vie treated for US tax purposes? And again, it really depends. It really depends on the nature of the investments, because the assurance vie is a wrapper, an investment product wrapper. So when you open it up, depends on what's inside. But ordinarily speaking, if it can be looked at as a financial asset. So in terms of a US tax perspective, we're looking at potentially Form 8938, which is the financial asset declaration form, or your FATCA form. It may, depending on what's inside, it may be on your FBARs, your foreign bank account report, and it may be considered a PFIC, or passive foreign investment company, where it will be subject to very specific tax rules. And just to provide context for that, the PFIC, or the passive foreign investment company structure, or it came in under President Reagan in 1980. So essentially, it was a response to complaints from US domestic financial institutions that Americans were going abroad and investing in foreign financial products and getting tax advantages to doing so. And of course, stealing or robbing US domestic financial institutions from opportunities as well. So Congress responded, and so the IRS created these rules around what are called PFICs. So essentially, any sort of investment-linked product outside of the US, take advice, chances are it may be a PFIC and subject to very specific US tax rules. So again, you'd probably need to speak with an advisor and go through the statements, but chances are it's a PFIC reportable on an 8621. So the income deferral that you would get from a France perspective, so income will grow tax-free often enough within that fund from a French perspective. From a US perspective, not necessarily so. It may be subject to the full weight of IRS taxation. So I hope that answers all 3 of you who asked that question, but don't worry, we get that every single time we do this. Okay.
The question, what I see often is that people, for example, have put some money in a life insurance in the US. They are in France, they get the money, and then they think they have some special tax schemes not to pay tax, etc. in France. But in France, we don't recognize the American life insurance as a life insurance in France. So all these rules are very specific to the countries. So, for example, if you put some money, if you life insurance in France and go to the US, I don't know how it will be taxed to the US, but these are, yes, that's quite specific to any country. And when you change country, life insurance, I think, is a bit difficult.
Yeah, absolutely. Life insurance is defined differently in different jurisdictions and treated from a tax perspective in different ways. So that's a great point. So I'm going to skip the other 2 people who asked the same question. I hope you guys are satisfied with the answers provided. So next question. Now, Hervé, I think you partly answered this in your presentation, but there's a twist in this. And so so my spouse and I are living in France since May 2021. So my rental property that's set up in the US exempt from the wealth taxes in France, as it is held in a trust in my name. So if he didn't put the trust bit at the end, he or she, I don't know who, if that person didn't put the trust part at the end, I'd say, well, hey, you answered this perfectly well in your presentation, Hervé. But now this person is saying, well, hold on, it's held in a trust. How is it treated from a French perspective?
Well, in France, we don't know trust. So if you have some real estate in a trust, in fact, we have improved. And so first you have to declare your trust in France and declare the real estate you have in it. And if there is a real estate and some revenues, in fact, you have to declare who owns the trust. And then you will have to declare the trust for your part of the trust. You'll have to declare in your personal income tax or in your IFI. In fact, and there are rules. In fact, France wants to know for all real estate that are in France who are the physical persons who are the owners. So there is an administrative way. In fact, if you want to declare who is the real person who owns a building in France, then you must pay a 3% tax. It is also, you can do it, but you have to pay a 3% tax on the market value of the building. So it's quite expensive. So usually people declare, even though you have a series of companies of trust, etc., you must go to the physical persons who would own more than 10% of a real estate property.
Okay, so in this case, just to summarize, this person's resident in France since May this year, and they have real estate in the US in a trust. So from France's perspective, the trust does not exist. It's transparent. So they see through the trust. Am I correct in saying
yes,
that?
but even though the trust is in the US, the real estate is in the US. As soon as you have a contributor or beneficiary or an administrator who is resident in France, then you must declare the trust to the French authorities. And you must declare every year the value of the trust, etc. So of course, you can go, there are many types of trust, I think, etc., etc. And so maybe the property of the trust should it be considered in the IFI, etc. But the tax office knows you have some properties in the trust, and they can tell you why is there no value in your tax return. And then you have to justify yourself.
Understood. Perfect. Okay. Now moving, because this person is asking like different parts within the question. So is my rental property that I have in the US exempt from wealth taxes in France if they are set up as a business? So I guess in this scenario, he or she is asking, well, suppose it's not in a trust, but if it's in like a company, like a US LLC. And just to follow on from that, so if it's still subject to the wealth tax in the LLC, the US LLC, is there any way of structuring it to avoid the wealth tax in France, which is going to be levied on worldwide real estate? Hervé?
No, there is no. There is no. In fact, as the rule is you declare, well, your wealth less what is needed to get it. If you have, for example, some debts, if you have a credit running to pay for this real estate, then it will come as a deduction from the value of the real estate, etc. But no, if you possess some real estate through LLC, if this real estate is more than 50% of the value of the LLC, it is completely taxable.
Understood. And the person is, I guess they're really, you know.
But be sure that the French tax office is completely, cannot have any view of what is the value of this real estate. So declare the real estate, and I shouldn't say that, be reasonable in the value of the real estate, and they can only get your declaration.
Right. Okay. And, you know, the person asked they wrote a lot, right? So he or she's asking, the properties are run as a vacation rental business. I guess kind of like an Airbnb kind of thing. So again, that perhaps would kind of connect with what you just said, right? Because it's not just a holding company. There are, rent is being charged, so there's cash being accumulated and whatever. So depending on how it's structured, it may be that the real estate component may be less than 50%. Maybe.
Yes, maybe, yes.
Maybe, yeah.
Yeah.
So perhaps there may be a planning opportunity there. But of course, this is not advice. You need to follow up with Hervé one-on-one to
Sure,
make sure.
this is, we have to read closely what the legal texts say, and they can change, they can be, their interpretation can change from one year to another. So it is to be closely looked. Yeah.
Absolutely. Okay. Next question. If I have capital gains on the sale of my primary residence back in the US, where I lived 3 years ago before I moved to France, would it be exempt from capital gains in France? I think, Hervé, you answered that in your presentation, but please.
Honestly, I think the capital gains you have on an account in the US are to be taxed in the US. That's I don't know the exact rule, but that's how I see it, because in fact, banks declare the capital gains to the tax office, but an American bank doesn't declare the capital gains to the French tax office. So
but if the person,
I don't know how it would work in practice.
Okay, so from a US perspective, that's easy. It's going to be taxed in the US. But from a French perspective, they're now tax resident in France, and they've sold their property back in the US. Would that be subject? I would imagine.
If it is a capital gain on some real estate, then it is to be taxed in France.
Okay, right. Okay, clearly. Okay, right. Okay, so I'm moving from one platform to another as people are asking on different platforms. So, and I'm conscious of time, so we probably do just 1 or 2 more questions, and I do apologize because I see a whole bunch of questions under that. I'm sorry we couldn't get to yours, but we've had a lot. Question. So a dual citizen, French and US, who's working in South America. So good morning or good afternoon to you in whatever South American country you're in. If they pay into the CFE in France, I guess, the social charges, right? Can they claim the totalization agreement with the US? So I'm guessing in the scenario in which they're earning self-employment income and they're going to pay voluntarily, pay into France, which many expats do, French expats do. Would they be relieved of having to make the same payment in the social charges, i.e. Social Security, back in the US, self-employment tax to 15.3%? To answer it from a US perspective, potentially you may get that relief. You may be able to claim on the totalization agreement. But of course, I've just seen 2 lines in your question. We really need to sit with you and understand your circumstances inside out to see whether we can invoke the totalization agreement in your case. But potentially, yes, potentially. Okay, and I will do just 1 more, and I do apologize because there are lots of other questions under this. When selling stocks owned in the US, there's of course a capital gains tax in the US. Would there also be one applied if you're living in France by the French tax office, or would that be considered double taxation? Hervé, I think you mentioned that.
The global rule is no double taxation.
Exactly. So
Yeah.
you will get tax credits, right? One way or the other.
Sure.
Yeah.
Sure.
But,
that's the main rule of the treaty. Yeah.
Yes, but so the US will take the stocks are back in the US. Okay, so states won't get into that. But yeah, so from a federal point of view, so with the IRS and France, no, you won't be double taxed because there are tax credits. So, and unfortunately, I'm sorry, I see so many questions on different platforms. We will do this again in the new year. Thank you for joining us this evening or morning, depending on which time zone you're in. And we also do these live streams every week on different tax topics of interest. Hervé, if someone wants to follow up with you directly, what's the best way of contacting you?
Oh, mail is very nice.
Okay,
Yeah,
email
is the most effective, and I should answer it quite quickly. I hope maybe this weekend, but not later.
Okay. I know you had it.
I have seen there are some other interesting questions, and don't hesitate to copy them in a mail, and I try to answer them.
Right. So what's the best email address to get you at, Hervé?
Because you have several, or hb@Cabinet Belove. It's my direct mail, and I see them. But there is maybe another one. You have seen contact@Cabinet Belove, maybe? No,
yeah, you tell them. I think on your slide on the last.
No,
slide,
I have not such a big company as it can be lost, and everybody speaks English in the firm, so no problem. It won't be lost. It will be transferred.
So if you're watching this, you can. This is being recorded. You can just rewind back to his presentation at the beginning. His last slide had all his contact details, his email address, the website, phone number. Feel free to reach him directly.
I don't move from my chair. I don't move.
And from a US perspective, we're htj.tax, so you can reach us and help at htj.tax. Thank you for joining us. Have a good evening.
Bye, then.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at htj.tax. Please subscribe, like, share, and comment below. Email us at help@htj.tax to engage us, to advise on international tax or business matters.